Hey guys, Jake Knuppel here with Mortgage Nerds, and we have
Scott Bonovich.
Today we want to touch base a little bit on what types of offers are getting accepted out there. We know that the market is crazy. We're not gonna, go down that rabbit hole a little bit.
Yep, everybody knows.
Everyone knows it's hard to get offers right now. There's not enough inventory out there. I think it's slowly starting to pick up a little bit, but really we want to talk about, as a seller, we want to get a house updated to the standards of different loan programs, right? Whether that's FHA, VA, USDA, conventional. We could talk about loan programs forever, but there's different loan programs out there that if you are interested to get pre-approved, give us a call. We can take your information, kind of talk you through that process. But let's kind of talk about the difference between a lot of loans right now are conventional, right? So let's talk the difference between FHA and conventional, for example.
Yeah, and again, Jake spoke on it, but we understand that as agents, your job is to represent the seller, and we know that on average right now, the average listing that has the average listing receives 12 offers. Okay, so you really as a seller and as a listing agent, you're basically you are in a position of power, right? I mean, in a different market, there might be 1, 2 offers or whatever it may be. So now you have the ability to pick and choose, and in some cases, and we know this because we all work with qualifying buyers and try to put them in the best position and advise them on how to have their offer stand out and all those things that we can, kind of go over, that all the tricks of the trade that everybody's sort of been playing now to try to get their offer to stand out. But, one thing that we do notice, because we come across this as lenders, is that we have a loan program that might be what's beneficial to us, our clients, right? So we understand, again, what may be most beneficial in the eyes of a seller is, hey, I want to take a conventional offer because it is the path of least resistance, right? It's going to possibly be the least amount of work that I have to worry about. I don't have to worry about appraisal, guideline, things coming up, and so forth. Now, while I agree with that in some cases, if there is a house that is, in rough condition, right?
Needs some updating, doesn't have smoke detectors, CO2s, railings on stairs, maybe chipped and peeling paint, those types of issues that could cause problems on certain loan programs.
But the reality is, in those situations too, in my opinion, if I'm a seller, I'd want my real estate agent to say, listen, you got a little peeling chipping paint that would not be addressed by a conventional loan, but it will be by an FHA loan or a USDA loan or a VA loan. You've got maybe a missing handrail, and maybe you don't have a smoke detector or CO2 detector. When I look at that, peeling paint, let's assume that it's a day's worth of work to do a handrail, peeling paint, chipping and peeling paint, spot scrape, paint, clean up the debris, and put in or install a smoke detector. If I do that, or I tell my seller to do that, now I can accept all offers. I can accept all offers.
Opens up those guidelines, right?
Conventional might be what's cleanest, but it's only cleanest because as an agent that, hey, this house is going to have some issues. If you say, hey, we want to be able to accept all offers, so the best offer on the table could be an FHA loan.
Yep.
Is it worth them to spend a half a day or a day and $300 to be able to, cost, to be able to accept maybe an FHA loan that then isn't going to have any issues, based on the things that you did. And that offer is $3,000 higher than any of the other offers.
So if I'm a listing agent and a seller and say, well, Scott, why don't I just not do any work and keep my, only accept conventional offers because I know it's not going to pass FHA, VA, USDA.
No, I agree. No, like I said, but you're not always going to have that as an option. Always, in some cases. And again, everybody looks at conventional and says, okay, hey, this house is, there's got some issues to it and stuff. Well, a conventional appraiser isn't blind.
No.
They can't unsee what they see. So there's a chance or possibility that even there's some issues that may come up on conventional. But if it's something as simple as peeling paint and that sort of thing, I get it. You guys have an opportunity to say, hey, we're just going to look at, there's 10 offers, 7 of which are conventional. But what if, one of the 3 that was FHA, what if that one was $5,000 more? And if I had $400 or $500 worth of work in a day or a weekend to get that done as a seller, I'll make the extra $4,500.
100%.
I'll spend the $500 in the day to get that if I can accept all offers.
Do that all day long.
So the reality is, I get it. It's a quick and easy opportunity to say, hey, we're going to just nix this FHA offer. But we know on the lender side, sometimes that FHA borrower is more qualified.
Yeah, let's talk about that a little bit. So, with FHA, VA, USDA, there's some expanded guidelines that go into on our end as a lender, right? So
more relaxed criteria.
Yeah,
a little bit more.
You have better DTI ratios. Maybe you can get approved a little bit higher with one loan program over the other. Conventional is a little bit stricter.
Yep.
It all depends on someone's credit scores as well. So it's super complex when you talk about different loan programs and what may be the best beneficial net tangible benefit for a buyer in this case, right? Because then you go into PMI. FHA as a standard with PMI, or mortgage insurance, I should say. When conventional, we have the PMI, it could be higher, right? So you're really looking at different loan programs of what is the net tangible benefit of the borrower at stake here.
Yeah, and I think if one of the things that we're trying to do with our agents, and our borrowers and buyers, if we get an accepted offer or we have somebody that puts in an offer, reach out to us, or we'll reach out to you. We don't have a problem, if our client allows for us to be able to say, hey, listen, we got a qualified buyer here. They're strong, and let's face it, not everything's going to be a $90,000 house, okay?
Yeah.
So my whole thing is if it's a $240,000 house, but the FHA program, which it does right now, it's got a lower interest rate than conventional. I don't care, what you're comparing it with on conventional. It's got a lower rate. But if that's what's best for the client, what do you really have to worry about on a $240,000 house?
If the house qualifies?
As far as peeling paint, most of those homes are built after 1978, so it doesn't matter anyways. Yeah. So if you don't really have to worry about those things, then my whole thing is, then why does that offer take a backseat to really any offer? When it really, in reality, from a lender's perspective, it actually, let's say there's more room for error. In other words, like a client, if a client actually, screws up a little bit or does something that they were told not to, there's a little wiggle room there, where on a conventional loan, it's pretty clear cut and dry, so.
Guidelines are guidelines at that point, right, guys? So
keep an open mind, right? I mean, as agents, when you're looking at offers, sometimes, the path of least resistance isn't necessarily turn out being the best offer. So I think if none of us shy away from a conversation. If an agent, I've had listing agents call me that I've worked with before, how's your borrower? Yep. Obviously we can't share certain things, but hey, we got a good buyer here, a good borrower here. Shouldn't foresee any issues as far as the house is in good shape and everything like that. It's just, we'd rather see that type of loan, VA, FHA, USDA, not always take a backseat to conventional.
Right, and conventional, so let's talk about a little bit about conventional. If you have a buyer putting 5% down compared to a buyer putting 20% down, right? Maybe that borrower putting 20% down because they're qualified.
That could be all their money.
It could be all their money in the world.
Yep.
But that buyer with 5% down, they might be able to put 20% down, but they are choosing to put 5% down. That doesn't make them a less qualified borrower than the person putting 20% down. They might be in a better financial situation than the conventional offer with 20% down.
They actually are, because this person with 20%, and that's every dime they have. This person has 20%, they're putting 5% down. That means they have 15% of play money. Mm-hmm. So if they chose to, if the appraisal didn't come in, if they wanted to, they could say, all right, well, we're willing to pay $5,000 over because we have the funds. Where this guy over here is, hey, that's my 20%, is my 20%.
That's all I got.
That's it. It's what I got. So the old don't judge a book by its cover. Those are conversations that, sparingly we can have to some degree with agents, and let you guys know how qualified those buyers are. We know it's a crazy market. Sometimes the better offer gets passed over, I should say. So it's just a matter of let's communicate with our
agents, and then you guys can communicate with your sellers and buyers and whatnot from there. But every situation is so unique that we really need to have that conversation with all parties, just to say this is what's going on to a certain extent without giving away too much information, and then let's get you into the house.
Agreed. Mortgages are complex.
Let mortgage nerds give you the answers you need.